Morning, guys. You're watching DayBreak on Bloomberg Quint Live, and I'm Alex Matthew. First, let me take you through the headlines. The US Federal Reserve maintains its hawkish policy stance, hikes interest rates for the second time in 2018, and signals for 2 more hikes in the remainder of the year. Asian markets are dragged lower by the aggressive Fed, and the dollar also maintains its losses. ICICI Bank approves the stake sale of 2% in its life insurance arm to bring the promoter's shareholding closer to the regulatory limit. And the Cabinet Committee on Economic Affairs has allowed an additional 24,000 crore rupees of foreign direct investment into HDFC Bank. Now, the big story, of course, is the fact that the Federal Reserve raised rates for the second time this year and also hinted at a hawkish policy approach in the remainder of this year as well. It has penciled in a 4th rate hike in the current year. Now, Kathleen Hayes of Bloomberg News tells you exactly what to take away from that meeting.
We got the 25 basis point rate hike as expected. No big deal. But it was the very small shift in the dots that hit the bond market, hit the stock market, is hitting Asian markets as well. People, I think, are still trying to figure it out. Dots go, DOTS on the terminal, tells you this story in pictures. You have 7 dots saying, I think we're probably going to need to hike rates 4 times this year. Those dots represent FOMC members. Now there's 5 that say, no, I think 3 is more like it. That had been evenly divided, 6 versus 6. Now, it's interesting. We had Roberto Perli on Bloomberg Television just a couple of hours ago. He was the Division of Monetary Affairs at the Fed's Board of Governors. Very important position, a lot to do with setting policy. Here's what he said about the shift in the dots.
It's not a solid signal. I would be inclined to think about it in terms of more noise than signal. I think what the Powell Fed will do is we'll look at the data and take his clues from there. But I think the dots are a little bit just an exercise in forecasting.
Now, it's true markets also saw some hawkishness in the change in the FOMC's outlook for the economy. A little bit stronger GDP, lower unemployment, inflation a little bit stronger. But I think people maybe should pay strong attention to what Jay Powell said at the press conference. He sees wide uncertainty bands around things like the natural rate of unemployment. Where's the neutral rate? The rate maybe would signal the Fed should stop or only go a little bit further. And he said the Fed policy will be guided by incoming data. We will try to keep our minds open. So maybe we're seeing a little more hawkishness, at least in the Fed chair, than is actually there.
All right, the reaction of Wall Street stocks and treasuries was to turn south after the Federal Reserve raised the interest rates. Stocks were also pressured by revived trade war fears on a report that President Donald Trump's administration would proceed with tariffs on Chinese goods. Investors will now turn their attention to the European Central Bank, which later today will deliver its monetary policy decision. Bloomberg's Abigail Doolittle tells you what happened in Wednesday's Wall Street session.
Stocks finished lower in Wednesday's Wall Street session. This after the Fed raised rates as was expected, but expressed a bit more of a hawkish view than some had expected. The Dow fell about 0.5%. The S&P 500 fell by 0.4%, and the tech-heavy Nasdaq dropped by 0.1%. This after putting an all-time high earlier in the session. As for sector composition, only one sector was higher for the S&P 500, the consumer discretionary sector. 10 lower. One really stood out, the telecom sector. The telecom sector was down 4.5%, its worst day since 2011, dragged on by AT&T, down more than 6%, its worst day since 2008. That, of course, came after a federal judge did rule on Tuesday after the close that AT&T could go ahead with its proposed merger with Time Warner. Time Warner shares popped higher on the day, up nearly 2%. As for some other movers in that space, we did have the shares of 21st Century Fox up more than 7% on the expectation that Comcast would put in a competing bid to Disney's $52.4 billion bid, which came in after the close. Comcast did, in fact, put in a competing bid for certain Fox assets of $65 billion. So there is a bidding war between Disney and Comcast for those Fox assets. One other big winner in the consumer discretionary space, Netflix, up more than 4%, actually up 4.9%. This after Goldman Sachs did raise its price target to $490 per share, a street high. And finally, on that Fed move to raise rates, the 10-year yield did pop briefly above that all-important 3% mark, but moved back lower, popping slightly higher overall. In New York, Abigail Doolittle, Bloomberg News.
Well, it's a muted start to trade in Asia, and the only market, in fact, that I can see that is trading positive is currently the Australian benchmark, and that too only a few ticks in the green. The Chinese markets have just opened up. They're down not by that much. In fact, the Shanghai benchmark is down only about 0.1%. The Hang Seng has opened with 0.3% lower. The Kospi, remember, was shut yesterday, and therefore it's making up for that and is down over 1% in trade today. But with that, let's turn to the Indian market, and Darshan Mehta is here as usual to set you up for the day's trade and also to tell you what's happening in the futures and options space. Darshan, muted start expected for India?
Yeah, so that's what the SGX Nifty is indicating, Alex, at this point of time. Global cues also not supportive. But first, let's take a look at the ADRs and a big cut coming in on HDFC Bank, despite, the capital allocation that has been increased. Despite that, HDFC Bank was down 2%. Vedanta, Infosys, Tata Motors also trading weak as far as the ADRs are concerned. The only ADR that did well was Dr. Reddy's, following it up with what happened in the markets yesterday. So it has been doing extremely well for itself, but the other ADRs were down in trade. Now the SGX Nifty is indicating a negative outlook. Probably we might come in close or even go below the 10,800 mark in trade. So down by almost 37 points currently. Now as far as the sectors are concerned, now while the Nifty was just up 13 points, weakness was seen on the broader markets. You could see the Nifty mid cap down by almost 66 points. And the small cap was down by almost 16 points. So there seems to be a lot of gains that were given up during the day. The Nifty Bank did manage to hold on, but traction over the past few days is really with the Nifty PSU Bank. Another 1.5% upside was seen on the sector. Now the two sectors that did well yesterday, IT, given the fact that TCS announced a buyback, and Infosys, it's 25 years today, there is a lot of expectation, so that is doing well. And pharma as a pack is generally doing well. It's a big rebound that's come in. It's up almost 15% in the last 4 to 5 trading sessions. So pharma continues to do well. What hasn't done well is the Nifty Media Index, which was down almost 24 points in trade. Now if you're looking at the sectors that have done well, in this month itself, the Nifty Pharma Index is up almost 9% in trade. The Nifty PSU Banking Index has done rather well for itself. It's up almost 6% and it's gaining every day. And the Nifty Energy Index is up almost 3.5%. But some of the sectors which aren't doing well are basically, the high beta counters, the infrastructure plays, the real estate plays, and small cap obviously is extremely high beta, so it's down by 1.5%. Even on a YTD basis, again, IT and FMCG money seems to be flowing in consistently. Every day they seem to be moving up, and they've been outperforming the benchmark indices by almost 4 times currently. What has not done well, again, is the high beta. You have the real estate, the PSU Banking Index, and the small cap. No doubt the PSU Banking Index has rallied significantly from the lows, but on a YTD basis, if you're looking at it, the returns are negative currently. Now, in terms of stocks at 52-week high, the frontline counters, Bajaj Finance is doing well. Britannia topped the 6,000 level in March. DMart again will be in focus because of the analyst meet today. Glaxo Pharma, MNC Pharma is doing well. Infosys 25 years today. Page Industries, the Jockey News, and RBL Bank. So most of them have news attached, but these are all large caps which are doing well. And as usual, quality, despite all the promoters buying in the open market, quality, actually the stock continues to be at a 52-week low. Now as far as flows are concerned, FI sold in 771 crores, DIs bought in almost 487 crores. With that, FIs on a month-to-date basis have bought in just 257 crores. The elevated number was on account of the HDFC Bank buying, but that also has cooled off. DIs are the one that are supporting the market. 5,300 crores of net buying by DIs this time around. The Nifty was up 13 points. What contributed? IT and ICICI Bank, those were the large contributors. The HDFC Twin contributed in a negative way. But on the FNO side, if you're looking at it, what happened with the Nifty, with the Bank Nifty, you could see that there were fresh long positions taken on the Nifty on high open interest build up by of almost 4%. Even if you're looking at the Nifty Bank, that saw open interest build up of 5% on the long side. So that's what happened with the market itself. Now, in terms of what happened yesterday, despite the market being rather muted or coming down, put writers were still active at 10,700, 10,800, and they even started writing at 10,900, indicating that they believe that the market could test much higher levels. The resistance yesterday will come in at the 11,000, 11,100 mark. If you're looking at where the total open interest is currently, here you can see from 10,600 to 10,800 is where the bulls are very, very bullish. They've taken position, and bears have started taking positions from 10,800 to 11,000. So this is where the market is, and this is where the support will be. So it is expected to be range bound between 10,700 and 10,900 level in trade. Now, if you're looking at the stocks in the FNO band, nothing's changed. Dewan Housing, Balrampur Chini, Jet Airways and Just Dial continue to be part of the FNO band. Now, as far as the PCR is concerned, the Nifty PCR moved up since the market was also doing well, and so was the case with the Nifty Bank PCR, which moved up from levels of 1 to 1.04. Stock specific, which are the stocks you'll watch out for. Dish TV yesterday saw open interest build up of 42%, a big block deal. Rakesh Jhunjhunwala bought in, probably will be in focus today. Page Industries, heavy move on high open interest build up post the Jockey deal, again will be in focus today. High open interest again built up on Kaveri Seed. The counter managed to spike up in the last 15-20 minutes of trade, so fresh buying was seen on the counter. And finally, the last stock is RBL Bank, consistently moving up at a fresh 52-week high, and despite that, it's seeing high open interest build up on the long side.
All right, thanks so much for that, Darshan. Let's take a quick check on the rupee in the bond market now. The Indian rupee dropped about 16 paise yesterday to close at a near one-week low of 67.65 against the US currency. So far this year, the rupee has weakened about 5.6%. And do remember, of course, that there was a little weakness in the dollar in the previous session. So we'll have to see how the rupee and the other Asian markets react to the dollar today. The bond markets have staged a sharp rebound after two straight sell-offs, and the 10-year benchmark bond yield ended sharply lower at 7.93% compared with the previous close of 7.97%. All right, shifting focus to commodities now, and Jayesh Khilnani is here with all the updates there. Morning, Jayesh. How's it looking?
Morning, Alex. Let me start off with oil prices, which are currently trading absolutely flat. But remember that yesterday we had, an uptick for the third consecutive day for WTI on the back of a surprise inventory decline. Now, US inventories have actually declined more than 4 million barrels for last week, as reported by EIA. And also now we have one brokerage which also believes that $100 a barrel is now increasingly possible. That's Bernstein that I'm talking about. As far as base metals are concerned, the LME base metal index in fact snapped its 3-day losing streak and ended about 2/10 to 3/10 in the green. Nickel, which is the top gainer, that surged about 2.7%. That was the biggest gain that it saw for itself in almost a month now. Now this was followed up on the back of buying in the Shanghai Futures Exchange, where the bullish outlook for nickel has in fact surged to a high. Now aluminium and tin actually declined more than 1% each, and we had copper, zinc and lead which advanced on the London Metal Exchange. Now if you look at the Shanghai Futures Exchange, most of these base metals are in fact trading with a mixed note, where steel futures are in fact trading positive, and yesterday they closed at the highest level in about 3 months. As far as precious metals are concerned, we saw gold rally a bit on account of some softness that we saw for the dollar index yesterday.
Thanks so much for that, Jayesh. Now, sticking with what, in fact, Jayesh started with, crude oil prices, there's important commentary coming in from the International Energy Agency. It has said that OPEC members and Iran, that is Iran and Venezuela, could lose as much as 30% of their oil output in 2019 due to US sanctions and economic upheaval. This means that the other members of the OPEC, like Saudi Arabia, have to produce more. In its first forecast for 2019, the IEA said that US shale should be enough to cover the excess demand. Warren Patterson, who is a commodities strategist at ING Bank NV, is of the view that the IEA now also wants the OPEC to start easing the production cuts that it put in place last year. Listen in.
I think basically the IEA's report was a warning to, or a signal to OPEC that, okay, you've achieved your goal. You've brought down global crude oil inventories back, or actually below the 5-year average. It's time that you start easing those production cuts. And it's come in a timely manner ahead of the OPEC meeting next Friday, where there really is a growing consensus, given the pressure from mostly Russia, that we could start to see an easing in those production cuts, which is what we feel is needed, given the constant downfall we're seeing in Venezuelan production, along with the risk around Iran, given U.S. sanctions.
All right, turning to corporate news now, and in the first update that we have for you, ICICI Bank is all set to sell some stake in its insurance business, ICICI Pru Life. Yatin Mota tells you how much ICICI Bank is planning to sell and how it is planning to use the capital that will be raised.
ICICI Bank has informed the stock exchanges that they will be selling up to 2% stake in its insurance business, which is ICICI Pru Life. Now, they plan to sell up to 2.87 crore shares via various market issuances. Of course, this involves either doing it via offer for sale on stock exchanges or block deals, or in multiple tranches, what the company has informed the stock exchanges. So whatever the mechanism be, ICICI Bank will be selling shares worth nearly 1,200 crores in ICICI Pru Life. Remember, in 2016, ICICI Pru came out with their IPO. That was priced at close to 334 rupees per share, and now the shares are trading nearly at a 23% premium to that price. Clearly, this means that ICICI Bank is still on a monetization spree. Probably the 1,200 crores that it receives, which is of course calculated on the basis of the current market price, would be aiding its capital adequacy ratio. And on the other hand, they will also be able to comply with the regulatory norm, which entails a minimum public shareholding of 25% for listed entities. So from the compliance point of view, they will be able to meet the 25% minimum public shareholding, and on the other hand, probably this capital could be used to augment and aid their overall capital adequacy ratio.
All right, so that's one stock that you have to pay attention to today, ICICI Bank. Oh, actually two, ICICI Pru Life as well. Shraddha Babla is here with the other stocks that you have to pay attention to in trade today on account of being in the news. Shraddha, what are the stocks on your list today? Morning.
Good morning, Alex. I'm going to start off with HDFC Bank, whose FDI proposal of raising about 24,000 crores has received that approval from the cabinet. But that, of course, is subject to that 74% cap for foreign shareholdings. This, of course, is on the back of the board, approval that came in to raise 24,000 crore worth of money, to fund future growth, and that was announced back in December 2017. So this is the cabinet approval which has come in, but nevertheless, we are expecting to see some positive reaction on the back of this announcement. That apart, you have Cipla, which has said that its Ugandan unit Cipla QCI is exploring an IPO. In fact, they've appointed Renaissance Capital Kenya as a book runner. Additionally, they've also received a final USFDA approval for generic Isuprel injection, so watch out for that name. Oberoi Realty, here the company's QIP opened yesterday. The floor price has been fixed at 509.29 per share. That's a 3.5% discount to the closing price on BSE yesterday. So we could actually see some negative reaction here. Hindustan National Glass. Now this is not a company which has which trades with significant volumes, but they will sell 11.23% stake in HNG Float Glass joint venture for about $19.3 million. That's about 125 crores. As compared to the market capitalization of about 700 crores, so likely to see a reaction there as well. You have an ET report which says that Zee Entertainment and their deal with Reliance Broadcast Network could actually trip over price revision demand. Now the ET paper says that Zee wants to lower the price. Remember, they had announced a deal to buy Reliance Broadcast for about 1,872 crores in November 2016, and on the back of that, Reliance Capital will be in focus as well. Another ET report says that Usha Martin plans to sell one MT Steel, and that has attracted about 4 big players. Liberty Group and Kalyani, they say, have joined the race. Tata Steel and JSW Steel are also said to be pursuing plans, and the company has commented and said that they hope to get non-binding offers within 2 to 3 weeks. So that's another stock to watch out for, Alex.
All right, thanks so much for that, Shraddha. Now, after years of delay, Swedish furniture maker IKEA is gearing up to enter the Indian market, which it plans to disrupt with its diverse offerings. Now, earlier it was reported that IKEA plans to storm the Indian market with disruptive pricing, as it has planned to launch as many as 1,000 products that are priced below 200 rupees. Now, it remains to be seen whether IKEA can have a Reliance Jio-like impact on the Indian furniture market. But Bloomberg Quint's Charlene D'Souza caught up with Patrick Anthony, who is the Deputy Country Manager of IKEA in India, to find out how the company is preparing for its debut.
Today we've bought land in 4 cities. So it's Hyderabad that we opened 2018. 2019 we go into Mumbai, where we try to be omni-channel from the beginning. So we will open stores, we will open smaller touch points, and we will open the online channel. Then the year after we aim at going to Bangalore and then move on to Delhi. So this is the primary take on it. Then we're looking at other cities too, like Pune, like Surat, Ahmedabad, Calcutta, Chennai, and many more. But all will come in time, and the online approach will maybe make it go faster than we initially thought. So hopefully we can reach more of the many Indians in a quicker time than we were expecting only 2 years ago.
So when are you planning to go online? Is this as soon as next month? Because you're launching your first store, are you going to launch both together?
No, so Hyderabad will open like a classic IKEA store. So we can test and learn over the first year. And then when we go online in Mumbai, we will come as an online player. So we will do both store experience, we will have online experience, we will have contact centers, we have all those social media channels, as well as smaller touch points maybe near the customers.
And also, are you looking at changing the sizes of your store to reach more number of Indians? Is that anywhere in your strategy to connect with more people in India? Because space is also an issue sometimes in cities like Mumbai, especially in your metros and in your tier 1 cities. So if you could just tell us if that in any way will change your expansion plans.
So as of today, we're building the normal big IKEA stores that people have become accustomed from across the world. So the one in Hyderabad is around 400,000 square feet. The Mumbai one is similar. The Bangalore one will be similar. In parallel to that, we're exploring smaller format stores, which might be around 30,000 square feet or 15,000 square feet. Still not a small store, but we would like to be able to come more into the city centers and being able to reach people in different ways. And together with the online experience, we believe we can really create an IKEA experience that is wherever, whenever, and however you want as a customer. So we are very, very keen on this and super excited about getting going.
Interesting. Furniture that costs less than 200 rupees. Somit Sarkar is here to tell you about the big brokerage calls of the day. Somit, would you sit on something that costs less than 200 rupees?
Well, yes, my first brokerage stock is less than 200 rupees. Now, the target price is less than 200 rupees. So, the first brokerage call for the day is on Edelweiss on Aditya Birla Capital. Now, the brokerage has initiated coverage on the stock with a buy rating and a target price of 199, which is way below 200, which suggests a potential upside of 42.5%. Now, according to the brokerage, Aditya Birla Capital is in a sweet spot to capture the financialization story of India. Now, the brokerage says that there are multiple levers to sustain best-in-class growth and improved return ratios for the company. The company has a promising blend of different businesses, which includes the likes of an asset management company, a non-banking financial company, a housing finance company, and life and health insurance. Now, these businesses are scalable and also have a sustainable model according to the brokerage. Now, the brokerage also says that the business model of Aditya Birla Capital shares the similarities with successful financial entities like Bajaj Finance and HDFC. Lastly, it expects the company's EPS to grow at a compounded annual growth rate of 30% over FY18 to FY20, and says that the execution of business strategy is the key risk to potential valuation re-rating when it comes to Aditya Birla Capital. Second, we have a CLSA on ICICI Securities. Now, the brokerage has initiated coverage on the stock with a buy rating and a target price of 520, which suggests a potential upside of 46%. Now, according to the brokerage, ICICI Securities benefits from financialization of household savings and from its parent ICICI Bank's brand and reach. Among the company's businesses, the distribution and margin finance segment is expected to drive the revenue expansion for the company, whereas the broking segment is expected to remain subdued. Now, the brokerage is expecting the company's revenue and net profit to grow at a compounded annual growth rate of 17% and 21% over FY18 to FY21. Now, the revenue is expected to grow on the back of expanding client base and rising wallet share, while the net profit is expected to grow on the back of operating efficiencies. Lastly, the brokerage says that the dividend yield of ICICI Securities is one of the highest among the Nifty companies, and the company trades at a discount to global peers.
All right, thanks so much for that, Somit. Now, clearly, there's lots to talk about over the course of the day. You have the US Fed to dissect the decision that was made, and you also have the ECB that will come out with its decision on monetary policy today. That will be in the afternoon around. And also markets, of course. But there are several stories that are currently on the website that you can read, and here are just a couple of them. The government is now open to the idea of listing Air India as it struggles to find ways to sell its stake in the debt-laden carrier after one failed attempt. And US President Donald Trump was nominated for the the Nobel Peace Prize for his work in reaching an agreement to work towards denuclearization of the Korean Peninsula. He was nominated by 2 members of Norway's governing Progress Party. Now, I don't know if you're going to be watching this, but I certainly will. The Football World Cup 2018 kicks off in Russia today, and I'm going to be glued to the television set. It's the most watched sporting event in the world. Could you guess how much the television rights were sold for? Take a look. I'm going to be supporting Egypt for the World Cup. I always support the underdog. Let me know what you think about who's going to win the World Cup in the comment sections below. Thanks so much for watching. This is Bloomberg Quint.